What have you seen in terms of flows, and are they making you confident?
Yes, is the extremely short answer to that question. At the end of the day, these flows have been really promising. It's one of the best ETF launches of all time. We've seen north of $600 million in assets come into our product just in the last couple of weeks. That's really exciting because it's coming from a diversified base. And so while, yes, you're seeing some churn through legacy products, you're seeing movement towards new product in the market that actually has a lot of really critical features towards welcoming advisors into the community, which is ultimately, I think, how we're going to start to see the crypto ecosystem evolve from here.
Of course, 21 Shares is crypto native, and you've been doing a lot of the futures offerings already. You've been bringing the first ever ETPs related to these sorts of ETH and Bitcoin futures, and now, of course, the spot Bitcoin. What, therefore, of new spot products across other altcoins?
So we've actually been doing this for more than 5 years. So we brought the first physically backed spot products to market in Europe about 5 years ago now, and we cover a very wide range of assets through that platform, and we run about 40 products outside of the US. So it's quite a big cohort, and there's a lot of technical infrastructure that goes into supporting that, which we're really excited about bringing to the US. I think in the US it's going to take a little bit more time. I know we have some Ethereum applications that are out there in terms of new ETFs coming to market.
Do you think the SEC will go with that?
I think it's really hard to say at this stage. It's going to come down to how the arguments that were made in support of a spot Bitcoin product actually translate into Ethereum and what the maturity of that market looks like. We're obviously really optimistic about it, and we're looking forward to engaging with regulators on these topics. But I do think it's ushering in a new age of clarity, which we've seen in other markets around what these regulations look like and what that means for the development of crypto markets. And I think, as we've seen over the last 5 years while we've been doing this, there's typically a process here where once things start moving, it becomes much easier to have that ongoing dialogue.
Ophelia, there's a lot of data at our disposal to judge how is this going. Bloomberg crunched the numbers, and across the 10 ETFs that are out in the market, they attracted net $1 billion. But to me, that doesn't seem like that much. After all the hype of recent weeks and months and all the investors around the world that weighed in and said, we're looking at it, is $1 billion a lot? What does it tell you about current demand or appetite to get into this?
So what it tells me is it's very early. I think one of the pieces that's often missing in these narratives around these ETFs is actually there's an adoption cycle. Just because a product exists doesn't mean everybody has access to it. It takes a certain amount of time for these products to be added to platforms, for advisors to get them through compliance and due diligence. Sounds really boring on paper. The reality is that's when they're going to be looking under the hood and making sure these products actually behave properly. That's where you're really going to see operational excellence and expertise like ours come to the forefront and have those discussions as we bring these products onto advisor platforms. So for where we're standing today, the majority of the sort of intermediated assets in the United States don't have access yet. What you're seeing in that net $1 billion in just a couple of weeks is primarily being driven by either independent platforms or quite a bit of retail, quite a bit of self-directed. We haven't yet gotten to the place where you're really seeing advisors or models begin to include these types of assets. You have to get through that diligence process. They need to sort of battle test them and make sure that you're bringing best-in-class infrastructure to these products. And I think that's when you're going to actually see that shift. But that process takes about 3 months.
Ophelia, you wrote in your most recent newsletter about a Bitcoin-dominated news cycle. What happens next? Another Bitcoin-dominated news cycle?
So historically, you see waves. We're sort of midway through a Bitcoin-dominated news cycle. The halving hasn't happened yet. The halving being obviously when block rewards to miners are reduced by half, which is expected in April. I think through that cycle, you're typically going to see a lot of focus on Bitcoin or on what we would call blue chips. You've seen quite a bit of focus on things like Ethereum and Solana in the last couple of months, both from the crypto native community as well as from advisors and investors outside of the United States who have access to these investment vehicles. So I think that's been very interesting. We'll likely see that. Typically, you start to see more interest in alts, especially initially the larger ones, but eventually down that longer chain as you get further into a more positive cycle for crypto assets. So I do think we'll likely stay in Bitcoin for a little while longer, but that will likely expand from there.